Hello, and thanks so much for checking out the Coin Stories podcast video page. I'm Natalie Brunell, and I am talking to Bitcoin's thought leaders about their personal stories, and we dive into some of the latest Bitcoin headlines. This podcast does not provide financial advice. Super excited to share this episode is powered in part by the Bitcoin Conference. It's going to be held in Miami this year, April 6th through 9th, and it's going to be the biggest Bitcoin event in the world. All 4 days will be jam-packed with exclusive content, exciting announcements, and an incredible lineup of Bitcoin speakers, artists, and leaders. Day one is Industry Day for enterprising Bitcoiners who are looking to build a business or career within the ecosystem. Days 2 and 3 are general conference days featuring speakers like El Salvador President Nayib Bukele, who has promised a big surprise at the event, as well as CEOs like Michael Saylor, Elizabeth Stark, Jack Mallers, Adam Back, and hundreds more. The conference caps off on the 4th day with the world's first and largest Bitcoin music festival, Sound Money Fest, headlined by rapper and fellow Bitcoiner Logic. You're also going to hear from Steve Aoki, CL, Run the Jewels, Deadmau5, and many more. Last year's conference sold out, and this year's is on pace to be 3 times larger, so make sure you grab your tickets before it's too late. You can head to b.tc/conference for 10% off your pass using the code COINSTORIES. Also super excited to share this episode is powered by OKCoin, one of my favorite places to buy Bitcoin. You can dollar cost average without the crazy fees. OKCoin is the fastest growing exchange serving over 190 countries globally with the easiest onboarding and lowest fees around. They're on a mission to make learning about and buying Bitcoin easier than ever, and they're all about bringing more financial literacy to everyone, which is something I really care about as well. From being the only exchange to integrate Lightning to contributing over $1 million to Bitcoin core devs, they are doing incredible work to further the Bitcoin ecosystem. You can head to go.okcoin.com/Natalie for $50 in Bitcoin when you sign up. Super excited to share my guest today is Dylan LeClair. Dylan is the head of market research for Bitcoin Magazine, and he's one of the industry's go-to analysts and on-chain metrics experts. And he accomplished all of this before turning 21. Here's Dylan. Dylan, thanks so much for joining me. I'm super excited to chat with you for Coin Stories.
Yeah, this is gonna be awesome. Thanks for having me.
Okay, so let's hear about where you're from. You're very young, so I feel like this is going to be a pretty short coin story. So you're from Vermont?
I am, yes, indeed. Born and raised, 20 years old, did 1 year at kind of my local university, state university, studied business there. But I did ultimately leave, and it was because of Bitcoin, or at least, Bitcoin played a large part in my decision-making there. And we can dig into all that.
Yeah, I want to hear more about you. So growing up, like, what did you want to be? Were you fascinated with economics or money? What did your parents do?
Yeah, my pretty, like, I guess, blue collar background, even though I live in like the kind of the city side of Vermont, even though it's only like 600,000 people in the state, pretty rural. My dad is an electrician by trade, and kind of started doing maple sugar farming, which is just making maple syrup, about a decade ago. But
Wow.
For me, I was always just kind of a numbers guy, liked math. Wasn't really anything in particular, but just was always kind of quick with it. I didn't like writing at all. I actually hated it. So it's kind of funny now that I write on a daily basis about Bitcoin and markets. But yeah, I just went to study business and econ at UVM, just kind of thinking from like, hey, I like numbers. Let me start digging into this stuff a little bit more, and uncovered Bitcoin just kind of late my senior year of high school. Didn't really go too far into it, but just was intrigued by it all, and had more of an open mind than your traditional, Keynesian economist. And so throughout my first year of UVM Business School, just as I was learning more about central banking and how the financial system works, and really like getting a deep understanding of the Bitcoin protocol itself and how it operates, it was just the kind of a risk reward decision of, I think I know where the future is going, and the kind of investment in the traditional 4-year route of school and all that comes with it just didn't seem to be optimal. So I kind of just took a leap.
Wait, okay. So because obviously the economics programs that are in most universities today, they are Keynesian. So was it Bitcoin that taught you that there were these other theories that existed like the Austrian school? And who was the first person that told you? You just found it online, or did someone tell you about Bitcoin?
I kind of I heard about it through like a cousin, but really never went, it was like during the 2017 alt run, and never really thought about it for a year or so afterwards. I had a Twitter account, and luckily I kind of stumbled upon some Bitcoins like focused accounts, which was really, really big. But when I stumbled upon Austrian economics, I read the Bitcoin Standard. I think my senior year summer, and I emailed my the like economics head after like midway through my freshman year, after we got sent home for COVID. It was like that for the first time. It was March 2020. Like we all got sent home. I'm finishing up my first year, and I like really go down the rabbit hole because I have a ton of time in my hands. And I like email my the head of economics. I'm like, hey, like, do we have anything Austrian economics focused? And they're like, and they didn't really know what it was. Which was kind of funny.
Yeah.
And so I was just like, and they were teaching us like, oh, like inflation is 2% or whatever the CPI says, and like the Fed's funds rate set, that's the cost of capital, and they do the business cycle and all this. And at the same time, I'm reading about the Bitcoin Standard and programmatic money and open source software and running your own node, and don't trust verify. And I'm like, this just the dichotomy here between like where I want the world to go, where I think the world's going, what I want for myself, and like what I'm being told is how the world works is just off. So it was kind of interesting, like throughout just navigating that environment as someone that like really kind of bought into most things before that year.
Were you also someone who was into just following current events and what was happening with our country, or was your family impacted by just some of the changes that have happened, over the last 10 years? I feel like it's just harder and harder for people to save and for people to, pay for their kids' education and all of that. So where were you at in terms of just, how money plays a role actually in our lives and in our country and our society?
Yeah. So like, as I got older, I kept hearing about my parents always talked about, and having a small business. My dad was an electrician, right? And leading up to 2008, apparently things were fantastic and the economy was booming, and the personal business was doing really well. And they told me about 2008, how 2008, 2009, that period, how like there was no business and everyone was foreclosing, and it was like a super hard stretch. And then when I came to later learn about credit cycles and boom and bust cycles and like just central bank monetary policy surrounding that, and I kind of like put those variables together, I was like, whoa, wait, like they always talk about 2008, 2009 for a reason. And obviously like it's pretty simple, but as March 2020 came and that kind of like violent unwind and then reinflation, at the same time, I'm talking to my parents about this, and I'm like, what's going to happen next is everything's going to get a lot more expensive, and we need to buy a bunch of Bitcoin and like all these things that were happening. It's like, no, it's not political cycles. It's not like red team versus blue team. We have this pretty big problem, which is like money that almost no one understands. And like, I think I kind of may have stumbled upon a solution. And like a lot of the things that I was telling my parents, it's like, hey, like the price of food is going to go way, way up this year. And not like I'm some genius, but like, hey, they printed a bunch of money and they they handed out stimulus payments. We should buy some Bitcoin with that.
Have you orange pilled them? Have you orange pilled your parents?
100%. Yeah. They're on Twitter and everything. And they stack for sure. But they maybe thought I lost it for just a little bit there. But yeah, I'd say they're thoroughly orange pilled. Like my parents are like neither like super right nor left. I would say they like kind of lean more like just conservative values. But like, the political system is not something like that really. It just kind of more madness, and just like the absurdity of it all is as evident today as it's ever been. And so like with Bitcoin and the kind of the truth there, definitely, gives some hope.
Yeah. I mean, I love watching you because your insights are they're so brilliantly articulated. And I want to hear how you kind of came to be a voice in this space. So how did you take this from a passion and, being in school, kind of putting the dots together with your economics background and actually, putting your thoughts out there, doing your analyses. And I mean, now you're one of the go-to people.
Appreciate that. Yeah. I mean, it was kind of funny enough because I went from when I was in college, throughout the first semester, I was paying less and less attention to and like less time dedicated to my textbooks and like the things I was supposed to write and read and learn about for my curriculum. And I was more like working on Twitter and like reading blog posts in the Bitcoin talk forums from like 2012 and like reading Pierre Rochard write about a Bitcoin speculative attack in 2014 and saying things like Bitcoin's the best money ever. It's going to appreciate forever and boom and bust. Like the best thing you can do to protect yourself against this is to buy some. And I was reading it and I was just blown away. And I started allocating more and more of my time to this kind of like learning on my own, just like orange pill, just like it kind of just took over for a while. And I was just wasn't doing my university stuff. And that kind of turned into, instead of a little bit lurking, like putting my thoughts out there. So for like 6-9, I think like a year, basically, I was just posting like a kind of this niche Twitter, Bitcoin Twitter. I was like, and I was pseudonymous for a while. I wasn't like, I wasn't doing podcasts because no one really, no one cared. I had 300 followers. I didn't even use my real name. So I might have said some things that were like a little bit unhinged. But I kind of, as I gained more conviction and confidence and like, in my overall kind of thesis about Bitcoin, and just started sharing it, and people, like what I had to say, apparently. And so it's kind of compounded as my audience has grown, and stumbled upon a job at Bitcoin Magazine, just doing like media stuff in March of 2021. And so from there, kind of went from part-time to full-time to doing like daily analysis for our kind of our premium audience, and working with the fund there. So that kind of fits in with the number side of things that I've always liked to do. So It's been a whirlwind for sure. The last 2 years has been pretty crazy, but in terms of my coin story, I'd say only those last two are really kind of noteworthy or interesting.
Well, I think it's amazing. I'm super excited that you're in this space, and I want to hear a little bit more about your analysis. Like, did you obviously clearly already had the math skills, it seems naturally, but how did you learn how to do like all of the on-chain metrics? I mean, because it's still like, if I were to look at one of those sites, I wouldn't know what to do with it really. I look to people like you to give us that information. So can you talk about your analysis, where you get your information, how you analyze it, how you put that all out there?
Yeah, for sure. I mean, like the more of the kind of the macro analysis, like talking about, I wrote about the long-term debt cycle. I wrote a piece that like honestly was one of the things that first got me like noticed like at scale a little bit, was I wrote the conclusion of the long-term debt cycle of the rise of Bitcoin. And it kind of like used this like Ray Dalio framework of like these, short-term debt cycles, and then kind of coinciding with this huge long-term debt super cycle that's like, with demographics and things that like the average person never lives through more than one of them. So they don't know. And I kind of overlaid that with like a Bitcoin framework. And that's kind of what I think about like macro is like these short-term credit unwinds and then like boom and bust cycles. They're going to continue to happen because that's literally like how fiat's designed. And that's at the same time kind of overlaid with this like hyper Bitcoinization thesis. So like that's more the macro in terms of like derivatives stuff and like on-chain analysis, which like people often like kind of conflate the two, and they're pretty interesting on like short-term time frames, long like medium-term time frames. I think the reality is like, people want for on-chain to like, hey, buy signal, sell signal. And the reality is a lot of it's maybe not even telling you to buy or sell. It's just like the transparency of this network and the data that we can see with this like this monetary asset. We can see like how it's moving. We can see what it's doing, who's holding for how long, and just some of the things there. Like it's just pretty fascinating. And so Bitcoin Magazine was kind of like, hey, if you want to figure this out and have an opportunity, like just go for it. And so I kind of just jumped out at that, and I've been just sharing things that I find to be kind of interesting as I've learned it. I mean, I learned it on the fly. I'm not going to like bluff and say I took 5 years to study it. And I was just kind of lurking on Twitter and found a room of people that I thought kind of knew what they were talking about. And from there, kind of ran with it. But we can go over like various, certain metrics if you want to do that.
Yeah, for sure. And hey, I'm not dissimilar. I didn't go to the school of Bitcoin and I don't have an economics background, but like I did my best to learn as much as I could from all the great resources online and all the great authors and podcasters in the space. So, what are you interested in right now? What are you looking at? Tell me a little bit about, everything. Let's maybe start with on-chain metrics. I know the fundamentals are so strong for Bitcoin, right? We're upset about the price. We're kind of looking at choppy price action that's lower than all of us wanted. But the fundamentals I've heard you talk about multiple times are very, very strong. So maybe let's get into some of that and what you're watching.
Yeah, for sure. Like we can look at like kind of like valuation models. So like on-chain, we can like see like different HODL behavior and witness like these boom and bust cycles of Bitcoin in the actual data, not even the price. Say for example, I like to look at, and I talked about this with Mark Moss the other day when you were listening in, like the realized price, or that kind of on-chain cost basis, if you want to call it. And that's basically just the average price of every coin the last time it was moved. It's like, that almost like that true Bitcoin price, that true hodler price. That's like 24,000. So you can see during bull markets that kind of the market price really bends upwards relative to that like on-chain cost basis, as there's just a flood of capital coming in to try to get like not so many coins. And as the price gets bid up, certain hodlers will part with their coins to that new capital inflowing. But that's really what's kind of happening during a parabolic bull market. There's just a wall of money coming in and not enough coins being sold, not enough people parting with an absolutely scarce asset. And so right now we're kind of in a little bit of like, not an unwind of that, but right, we're 50% off the highs. Old coins are kind of distributing, like people that bought the, if you want to call it top, some of that money, like the macro funds that have came in 2020 and 2021, as the NASDAQ's fallen 20%. And recently it's rallied like off the lows. But Bitcoin for those capital allocators is just treated as a risk on asset, right? So if their correlated bag of assets is, their volatility model, say, all right, sell it. Right. But I think it's important to understand and like overlay that framework with like, there's a convicted hodler base and people adopting this asset, and like good news happening literally all around us every single day. We have politicians coming in saying like, we're going to treat Bitcoiners right. We're the Bank of Canada today, the financial committee, some guy went on a Tahini's restaurant. Ali from Tahini's is awesome. He was talking and like, are they going to act on it? Probably 99% not today, but he's talking about borrowing $10 billion and buying it and making Bitcoin legal tender. Like these conversations are happening. Yes. And the reality is like this asset is absolutely scarce. So everything like Intel coming in, you have these huge pension funds, like FTX just raised for $400 million in private markets. Like there's a ton of capital coming in that needs this asset class. And there's not that many people willing to sell it.
Yeah, well, I think it's interesting just sort of zooming out and the big picture of the macro environment at large, the traditional markets, sort of equities facing a little bit of trouble at the start of the year. Everyone's watching to see what the Fed will do. Will they hike the interest rates? Will they not? And you kind of touched on this in a really popular thread recently. So I'd love to go over some of the points that you made, because I think that they're really important, especially for people that are worried about the FUD, worrying about the price. So let's talk about some of the correlations that you've seen with Bitcoin in the traditional markets, because I have seen that it has been sort of correlated with liquidity and the equities, at least in recent years. So can you talk about your thread?
Yeah, of course. So I started it off talking about like that macro correlation, right? So if you're just looking at like Bitcoin and the NASDAQ, I'm not sure the number at the time, but it was released last week, but that kind of rolling day, 30-day correlation between Bitcoin and NASDAQ was like 80%. So like super, super, super tightly correlated. It was just a risk off, and Bitcoin was being sold in that kind of bucket. You can look like the volatility index of the S&P. It's called like the VIX. It's just like a standard kind of measure of how dicey things are in markets. And when it's spiking, Bitcoin is, at least like the past couple of years, it's really taken an initial hit. Right? If you look at, say, March of 2020, what happened? The VIX spiked a huge amount. Bitcoin sold off, and it went from 8,000, went from like 10,000 in like beginning of March to 8,000 to 3,800 in the same day, down like 55% intraday, and like liquidations everywhere, forced selling. But Bitcoin bottomed before equities. Bitcoin bottomed before traditional asset classes, because it's just a free, wild and open market, right? And like, there's no circuit breakers, there's no, trading sessions. It's 24/7, 365. And if you don't have enough collateral on a Sunday night, like, too bad, your position's getting closed. And so I think the reality is that financial conditions, because of where we are in like the long-term debt cycle, like overlaying this big kind of framework, they can't let like the equity indexes can't go 30% from the highs without something breaking. And like by something meaning like the entire credit system just completely unwinding.
Right.
So there is somewhat of an implicit like Fed put. The Fed has to come in and save these markets that are as leveraged as they've ever been. And the reality with fiat is that there's no base collateral for it to all fall back onto. It's just going to unwind onto zero if there's not more credit expansion. And so that's where Bitcoin, it gets really, really interesting, is that it's going to get hit during these liquidity crunches. and there'll be another one. But every time at the end of these little kind of liquidity credit crunches, Bitcoin seems to be higher than it was before the last one. And so I think it's betting on that trend to continue, not over the next week or month, but over the next quarters, over the next years, over the next decade plus. I mean, like I'm thinking multi-decade time horizons. Some people are thinking hourly time horizons. Bitcoin as an asset is much more advantageous to have that long-term view because of the underlying fundamentals and what happens in the fiat economy.
Yeah, you touched a little bit on Grayscale, and I wanted to ask you about it. It's in your thread. Obviously, it's trading at such a discount. What are you seeing in terms of just that as an investment and what people are doing?
Yeah, so Grayscale is kind of a closed-end Bitcoin trust. So currently they have 650,000 Bitcoin locked in that trust. Maybe I think a little less than that, but they bought from 2020 to 2021, they bought 400,000 Bitcoin and then issued GBTC shares to their investors. And so those GBTC shares trade over the counter OTC markets. So that's not like a ETF where for every dollar of inflows, they buy $1 of Bitcoin and it trades to net asset value. It's not like that. And so traditionally, like in 2020 and for 5 years prior, GBTC traded at a premium to its net asset value. And so you as an accredited investor or an institution had basically an incentive to go to Grayscale, give them $100 and get $115 of GBTC or $130 of GBTC. There was a premium to that net asset value under the condition that your shares are locked for 6 months. But like a lot of asset allocators, especially following the stimulus in 2020, were looking for like ways to allocate capital. And there was literally a quote unquote risk-free trade to go to Grayscale, give them your shares, you get the GBTC derivative, and you immediately mark up your books with a 20% profit. And you can short Bitcoin or do something else to kind of arbitrage that spread. But things kind of got dicey when that premium for the first time ever traded at a discount. And so there was no more demand for investors to basically lock up Bitcoin with Grayscale. And actually, as that premium went to a discount and went to like a further discount, there was really like a incentive to not buy Bitcoin and buy GBTC itself. Because for the convicted hodler, for like the sovereign individual thesis, buy Bitcoin, self-custody, 100%. But like there's a whole kind of different like kind of trapped capital, like whether it's with pension funds or all of that, where like, they're buying treasuries or like, they have to buy traditional asset classes, and GBTC is an alternative.
Right.
And so like 650,000 Bitcoin, currently that discount is at 26% discount to net asset value. So like if you're just in a retirement account or, you're trading on Charles Schwab, you can't send or receive Bitcoin, but you can buy a GBTC Bitcoin derivative. And it's basically like buy Bitcoin at like 28,000 or something, 29,000, right. Top of my head math. And so, I say don't buy GBTC, buy Bitcoin, because you can hold it and custody it yourself. Mm-hmm. But for an institutional investor, you're not going to be holding on keys on your gold card. It makes sense to buy some GBTC at these levels.
Well, yeah, I was going to say, right now it's so low. If we were to see a spike, especially if the markets resume their run up, we're going to have, I think, new all-time highs in the S&P pretty soon, and they're not going to necessarily be able to hike rates. It might be a good time to have GBTC because I think it can only go up from here, but I don't know. And they can never sell their Bitcoin, right?
Yeah, they auto roll off 2% a year, but that 2% is divided by 365. So Grayscale is actually like selling like, off the top of my head, like 20 something Bitcoin a day or 30 Bitcoin a day or something, just like auto roll off, baked in contractually, technically forever, which is just like a money printer machine. But we'll see if that ETF change comes at some point.
Yeah, that's one thing I do want to touch on, the ETFs. But before that, what should people be paying attention to when it comes to Bitcoin derivatives? Yeah,
so Bitcoin derivatives are like obviously kind of a more higher level like area, and it's something that honestly I think like the average, like just for most people, like, and I read a daily newsletter about this stuff, and we tell like, hey, 99% of people should just auto allocate DCA. This is what I said at the end of my thread, by the way. I was like, the best strategy for most people is just auto allocate and hold and have a multi-year time horizon, because the volatility is your opportunity. Like Bitcoin's 50% off highs. The future returns wouldn't be that great if it was still moving down 50% in the span of 2 months. So I think that's the first thing. And the second thing is that these derivatives, these kind of physically settled, like instantaneous mark-to-market Bitcoin derivatives, leverage trading on top of these Bitcoin crypto markets, it like exacerbates some of that volatility. So you see at like tops, like there's these new capital markets in Bitcoin and crypto, where you can take your Bitcoin and you can get US dollars, or you can get more Bitcoin, which is called like with leverage. You can bet on the price of Bitcoin to go up or down. And at tops, you often see people borrow money with their Bitcoin to buy more Bitcoin. And sometimes they can do that and that really like heightened level. And so at the tops, you see everyone wants to long their longs with more crypto. And at the bottoms, you see everybody's very overprotective and betting on the price to go lower. And oftentimes, the way of max pain is taken, and the people that are like over long or short at the bottom and tops kind of that's why you see like over the summer, right? When Bitcoin was 29,000, everybody leveraged to short Bitcoin. And there was a massive short squeeze a couple of weeks later to 40,000, volatile to the upside because of these free and open markets. And so right now we're actually seeing for the first time, like the market's starting to go short. Derivatives aren't long, but you can actually get paid to be like in a long Bitcoin contract. Don't need to go like in the weeds too much on that, but I think you kind of see these swings, both the upside and downside, that's like exacerbated by these derivative contracts.
Well, I was going to ask because I felt like in the fall, especially when we did kind of close in on, the 60s and we almost hit 70K, everyone was long Bitcoin and they were certain that it was going to hit 100,000 by the end of the year. Obviously, stock to flow model predicted that. And all of a sudden it was like something turned around and we were just like cascading downwards. Did the derivatives have a play in that? And did people take advantage of that like hype that everyone expected it? So it obviously always does the opposite. Or what were your thoughts? Because since you're watching this, are you seeing something we're not seeing? Like, did you expect sort of the turnaround from that 69?
Yeah. So I'll be lying and saying like, I sold the top and shorted it to perfect. Like I did not, and I expected higher highs, at least at the beginning. But you can definitely see in the derivative markets, there was a lot of hype around that futures ETF. So you saw like say the rolling basis. So there's Bitcoin spot markets, USD exchange for BTC, and then there's this futures markets. And so for example, today in January 31st, there's March 31st or end of March 2022 contracts. And so we could like me and you, Natalie, could agree to buy or sell Bitcoin at that moment. And so there's like, if you do a 3-month futures out from the current price, and you take that difference, and you kind of annualize that return, you get this kind of annualized rolling basis. And so right now you can capture basically like a 10% yield or 10% like ROI by just selling futures, buying spot Bitcoin, and agreeing to sell it in the future. And you can just capture like a risk-free rate, right? So you saw leading up to that futures ETF, like through September and October, that basis kind of exploded as like these markets expected a bunch of capital to flow in. And then after kind of all that hype, it was mostly just people in derivative markets speculating that Bitcoin was going to go up a lot higher. And there wasn't really like any native like Bitcoin capital inflow otherwise from like legacy markets, or like we saw following 2020, that stimulus, right? So for Bitcoin to go higher over the long term, you need just like that organic capital inflow, which is happening. It's just not happening enough for Bitcoin to be a multi-trillion-dollar asset class right now. And it'll come. It's just a matter of when the marginal like macro sellers, the people that are dumping NASDAQ tech stocks, and the people that are dumping Spotify, and the people that are dumping, like all the FANG stocks, when those marginal flows outwards turn back inwards, because these credit markets have to expand, that's when Bitcoin really explodes, because that seller, there's not 21 million coins for sale. There's, just maybe probably like 500,000 Bitcoin, 200,000 Bitcoin on a day-to-day basis are deciding the price of this asset. And that DCA army eventually kind of strips all bear walls, all sell walls.
Yeah, exactly. With that futures ETF, I mentioned on one of the last like media hits I did that, Wall Street kind of does have the power now to push the asset around, the price around at the margins with futures trading a little bit, but like the secular trend for Bitcoin is up. And as soon as that liquidity, that demand comes back, like it is the power to break through new highs very, very, very quickly. Right. And I mean, as the SEC keeps denying the spots future or the spots ETFs, but if that were to happen, that would definitely send Bitcoin to 100, don't you think? I mean, do you think that they're not approving it because of that?
I don't know Gary Gensler's motives, and it's certainly odd, just based on a lot of the other futures or all like the other ETFs that are allowed to pass. You have short volatility ETFs, 3x long oil futures, like all that's weird stuff. These instruments, a spot ETF, especially with just how legitimate some of the applicants are. Grayscale included is kind of ridiculous. And that's a huge catalyst for like these spot capital inflows. Just these legacy allocators just can't get direct exposure to the asset. I mean, you could buy Bitcoin miners, or you could buy MicroStrategy, which is like they have debt on their balance sheet, they have execution risk. Like you could buy Coinbase, but a lot of them just want that asset exposure. And if you're buying that futures contract, that futures ETF, you can actually bleed out against Bitcoin itself because there is that premium, right? So you're buying Bitcoin for $1,000 more than it is currently. And then at the end of the month, you sell it for the next contract, and you're doing that in perpetuity. And so that isn't very optimal for like so-called investor protection. So what are Gary Gensler's true motives? I'm not sure, but that's definitely one of the catalysts, along with like kind of this interesting geopolitical game theory that we could see play out, and I think we will see play out in the future. I think those are probably the two biggest catalysts at the moment. Future catalysts.
Do you have concerns about the futures in the long run? Because one of the things I talked about with Mark Moss in one of my last episodes with him is that he sees that as one of the potential threats for what doesn't bring about sort of those high prices that we want or mass adoption is something to do with futures preventing that and suppressing the price. And, obviously just it's synthetic Bitcoin. It's not actually Bitcoin, and they can just play around with it and manipulate it. Do you have the same concerns? And if not, why?
Yeah. So interestingly, I actually don't, because, and here's why. Like gold, for example, is an often comparison about like, as a monetary asset, why it failed. It's like the futures contracts. And I think the reality is that it's more so that like instantaneous final settlement was never possible with gold, the rock as a monetary asset. And it's often not possible with like, just like a lot of the monetary metals or other kind of commodities that you can buy like via paper version, in these like kind of the 21st century, like financialized asset, you could buy like wheat futures, right? Like, but you're not actually getting wheat. But with Bitcoin futures and CME excluded, but we can discuss the kind of the tether to that true asset there. With these futures contracts, there's one short for every long. And so the reality is like, if you want to short Bitcoin, like, okay, theoretical example, like what if the Fed came in and they just started naked shorting Bitcoin, tried and short it to the dirt, and they had unlimited money to do it? Well, the reality is a short is a future contract that you have to buy Bitcoin back. So if you want to short at the moment, great. But ultimately there's a counterparty on the other side of that trade that you have to cover with. And like whether that's through CME or BitMEX or Binance or FTX or Coinbase, when they have derivatives, you can short Bitcoin and you can push the price down like a beach ball underwater. But gravity, the way that financial markets work, is that you have to cover that short eventually. And so this is kind of like, that's one of the reasons like right now, probably Bitcoin it would be a little bit higher if there was no open interest. Because like you see like the price of perpetual futures, it's a futures contract that never expires, but just rolls over. That's a little actually like under the price of spot markets right now. And so longs are being paid by shorts just to sit in their positions. But if you think of it the other way, if the futures price is above the price of spot Bitcoin, then the shorts get paid by the longs. So you pay to be long Bitcoin. You pay like a little, like every 8 hours, just automated. And so like they're like, for the time being, like they can suppress the price of Bitcoin. But because there's a long for every short.
Is Bitcoin's price like a volleyball underwater right now? About to pop out?
I think we're starting to see that play out. We're starting to see like that kind of, I mean, I honestly think we'll probably chop around for a little bit longer. But ultimately, like if for the shorts for the last week are underwater right now. And so if Bitcoin continues, if we see like, we saw big buyers on Coinbase last week. If we continue to see those big buyers on Coinbase just relentlessly on the order book, these shorts, these contracts that agreed, I'm gonna sell Bitcoin today with and like, yeah, it's Bitcoin they don't have, and they could even be using dollar collateral to do it. But as the price of Bitcoin goes up, they have their fixed dollar collateral that they agree to buy Bitcoins back with is buying less and less Bitcoin as the price goes up. And so sometimes these forced buyers come in and they just explode the price upwards. Oftentimes, more people want to be naturally long Bitcoin or long crypto. Like crypto is usually overly bullish. Yeah. And so like every time a top happens, they're like, it's the derivatives. Like they always ruin it. When the reality, like the price was probably higher than it ever would have gotten in like otherwise. Yeah. And so like, it's kind of that like human fear and greed and emotion all wrapped into one. But I think over the long term, derivatives don't matter for setting the true price or like value of Bitcoin. Not don't matter, but they can't stop this thing from actually taking place because of that instant like settlement.
So why do you think it's still going to remain choppy for a while?
Yeah, I just think, equity markets can continue to melt up, and they probably will, but I think we're at like a turning point in terms of like the rate of change of the credit cycle. So like after March of 2020, everything was up and to the right, stimulus booming, Fed balance sheet, like up 25% year over year, printing money. And now they're trying to slow that down. I think the Fed will come to realize that their dial is less of a dial and more of a switch, but the music hasn't stopped yet, right? Like we saw 20% off the highs, I think there will be a bigger unwind at some point. And the response from that, I'm not saying we could reach new highs without new stimulus, just like because of this natural adoption that's happening underneath. But if Bitcoin's going to become a multi-trillion-dollar asset class, goes to 100,000, like I think a $2 trillion market cap is like $105,000 Bitcoin. So basically there, for that to really happen, you're gonna need a ton of capital to come in. And nation state adoption could be a catalyst. Spot ETF could be a catalyst. But I think the next huge bull market parabolic price action, that catalyst is when the legacy system cracks and the Fed realizes, wait, we can't even raise 50 basis points, or we can't even tighten just a little bit and reduce our balance sheet without this whole thing blowing up. That's kind of my base case. And I think they're trying to taper, they're trying to raise rates. But if that gets walked back at all, there's a lot of people that realize that, the emperor is naked. And I think that's when Bitcoin really runs.
Well, that's interesting, because I completely agree with you. I think that everyone probably agrees who knows this space that the Fed has lost all credibility, and they can't just keep kicking the can down the road forever, right? We're going to hit like 10% and then 20% inflation if they keep inserting liquidity and allowing the money printing and quantitative easing to happen. But you're right. If they were to stop and hike interest rates to the level that they would need to in order to correct some of these issues, they would crash the entire market. We would have a massive deflationary bust, which is kind of what I want to ask you about, because there are strategists out there, some of whom I really love listening to, like David Hunter, who say it's going to happen. You can keep delaying it, and they're going to try to keep delaying it. But at some point, when all of this credit unwinds, it is going to be the worst crash that we've had since the great crash that, sparked the Great Depression. And then they're going to have to initiate even more printing. So like, do you think about that? Like in terms of just, is that what's going to happen? And unfortunately, we obviously are seeing that when the equity markets start to drop, Bitcoin drops even harder. It's very liquid. And for many of these institutions, it's a super risk on asset. So, I mean, that's kind of scary, right? For people who have Bitcoin, because unless it's reached, 150,000, it could drop way below where we're at. So what do you think about that? Do you think that we're going to have this big crash?
Yeah. So I kind of think of when I talk about Fed policy, and when we think about what the Fed can do at this point, where the global economy is like at 400% debt to GDP.
Yeah.
If you look at like government debt to GDP being over 100%, real yields being at like -7% or -5%, whatever. and if they try to raise rates, what many people think of as like an inflation issue is more of like a credit risk insolvency issue. Central banks are trying to solve a solvency problem with liquidity, and that game can't go on forever. So like ultimately, like we're in a end game of historic deflationary bust, counterparty risk everywhere, financial system unwind, or perpetual credit expansion. And so like on the left side of the curve, it's like, okay, I need to protect myself against counterparty risk, which in the banking system, in the current fiat monetary system, is everywhere. Like if there's defaults in the housing sector, then the creditworthiness of everyone is going bust. People aren't going to pay back the loans. They have to force sell assets, and it unwinds. And so like in that scenario, the stocks that you think are worth anything, the credit that you're holding, even like the US government debt, like it's zero. So the scenario is like, and people like don't account for that. And so in that scenario, the BTC USD takes a hit in nominal terms, but it's what's the response from that? And how do you know that? And why is Bitcoin optimal? Like, why do I say don't buy GBTC, buy Bitcoin? Well, I say that because Bitcoin, if you're thinking about it as a commodity, has a production cost. It has a difficulty adjustment, and understanding Bitcoin mining as a commodity, and why it's basically continuing to become marginally harder to produce Bitcoin forever in an exponential manner. And then thinking about the counterparty risk, and like that is in the fiat system, and the property rights built into the Bitcoin network, that left tail, if it happens, if literally like we see the greatest fiat crash ever, equities go down 95%. Like Bitcoin will maintain relative purchasing power better than most things will, and you have property rights because of that production cost, and because you can hold it in a self-sovereign way. But it's what's the response from that historic correction if it happens? Well, the answer is more money printing. And so the right end of that bell curve is, okay, how do I protect myself against monetary dilution, credit expansion, money supply expansion? And for that I say Bitcoin first, only absolutely scarce asset ever, with a marginal production cost that's trending to infinity. And so like if the end game is truly binary, either way, you should probably own some Bitcoin,
right?
Because it's this globally liquid asset that you can store your time and energy in. And so like in a liquidity crunch, if it comes, and really when it comes, Bitcoin's going to get hit. But it's honestly probably the most pure signal of like this everything bubble liquidity. Bitcoin responded first to Powell saying, hey, we got to turn the music down a little bit. Inflation, we were wrong. Inflation's not transitory. Bitcoin dropped first. Equities were still complacent. And Bitcoin actually bounced like when everything bottomed recently last week. Maybe it's a local bottom, maybe it's not, but Bitcoin bottomed first. And so like I probably see, over 2020, this decade, Bitcoin is probably like the most pure reflection of like the public's perception of like central bank credibility and trust in the legacy system. Bitcoin's just like that check on the Fed, on the ECB. It's like, okay, we have an opt-out now, and more people are just like, hey, I don't want to play this game. I'm going to take it into my own terms. Don't trust, verify. I want Bitcoin.
But I mean, basically what you're referring to is something I discussed with Greg Foss too on the show. It's like the game's already over. Like we're already insolvent. We are keeping the music playing, but like it's over at this point. So unless we go on to the Bitcoin standard, or I guess for some people, they believe that somehow we could still go on the gold standard, which I don't believe would ever happen. Unless we do transition to this, like literally the dollar and the financial system collapses, right? And thank God we have Bitcoin. Like, so do you think that eventually the US will just capitulate and like the US will buy Bitcoin, or how do you see this playing out realistically?
I think the beauty of the US in general is like, it's not as centralized or top down. We have like kind of this like jurisdictional arbitrage that occurs with the 50 states and state rights and all that. And then even at like a smaller level than that, right? Like an individual level or a community level, a state level, or county even, you're seeing like governments are actually incentivized to adopt it, and political candidates are coming to realize that there's huge support for this in numbers all around the world, and they can actually get a social media buzz by saying, hey, I like Bitcoin. And so that's I think that's going to be a trend of the 2020s. And if Canada buys it or US buys it, or if a government wants to mine it, that's gonna happen. It's just a matter of when. But I honestly am more excited about like the kind of individual revolution of like, maybe the US government never buys it, but maybe 300 million Americans own some. And that's where, like, at an individual level, like getting people empowered to understand this, but also getting the average person to be like, hey, you should probably just accumulate this with 10% of your disposable income every day, if you can do that, and just save it regardless of price. It goes up, down, sideways, great. Like if you want to learn about what's happening with on-chain metrics and derivatives, like fantastic. Yeah. But just buy some and hold it like that, and you'll do well for yourself over the coming years.
All right. Well, I know that you're not a fortune teller. You don't have some sort of a tool you can look at that just tells the future. But if you had to guess right now, over the next year, maybe go beyond, you can go 2 years, like what do the next year to 2 years look like? Do you believe that we will hit 100K? Do you think that they're going to hike rates? Do you think that we're going to see a crash of a certain degree, magnitude? What do you think is going to happen? This is your prediction. You're telling us the future.
Volatility. I don't think volatility is going away in the legacy system. I think it's, and so like Bitcoin traditionally, but more so, we'll see some sort of kind of like, whether it's volatility in the financial system or just like also like just against like kind of institutions. I think we're at a really interesting time. And so Bitcoin is going to be increasingly a chaos hedge, I think. So like volatility to the downside, upside, I think right now at 38,000, like it's pretty cheap. And we're due for some upside here, especially if we get somewhat of a short squeeze. But if legacy systems unwind next month, then all bets are off. And ultimately, like these moments where everything goes to hell, and maybe it doesn't happen next month. And if it does, the Fed will walk back a lot, right? It's kind of this game of chicken. So I don't have a crystal ball. I would just say, buy some Bitcoin. Don't put yourself in a place where if it goes to 30,000, you have to become a forced seller of the asset, because that's never a good position to be in. But the end game is clear with the legacy world. It's, if things unwind, we need more monetary expansion. There's $500 trillion of assets that are priced at negative real yields. So the US Treasury is the baseline cost of capital for the world. And that right now is a bond that yields negative 5% or 4%. So like it's a melting ice cube, as Michael Saylor and Greg Foss like to say. And so like all of these capital allocators are looking for a neutral, apolitical sovereign store of value, and most of them just don't know it yet. And so like, is Bitcoin going to be up a week from now, a month from now, even a quarter from now? I think yes to all three of those. But in terms of what's possible for the next 2 years, I mean, a lot higher than most people think. And some of these catalysts that we're going to see in 2022 are probably going to blow a lot of people's socks off. But, price targets are pretty tough, especially with all the kind of changing variables.
Yeah. Well, what's your end game? What's your goal in this space? I mean, you're so young, you would still be in college if it wasn't for all the success in Bitcoin, right? So what do you want to do?
Yeah, I mean, I'm figuring it out. That's for sure. I mean, for the time being, I'm stacking Bitcoin and just enjoying myself and getting to meet a lot of awesome people and talk with really smart, motivated people from around the world about this kind of new technology that's not so new, but yet still is. I mean, when we're in our own little like echo chamber, micro bubble on Bitcoin Twitter, it's like, oh, this is obvious. But like the reality is, like, most people are still, they have questions about this, and that they like, the understanding, it's obviously like a spectrum. And so for me, I just enjoy talking to people about it and educating, whether that's on podcasts or writing or with my friends and family. I mean, that's how it started, right? Like my first 1,000 hours of Bitcoin discussion was badgering my mom about it and my friends, and being the guy that was passionately talking about it at parties like a nerd. But now that I do that as a job, and so the end game for me is just spread the good word. I enjoy putting my thoughts out there and figuring it out as I go, I guess.
So were you always Bitcoin only, or did you ever go down that path like so many, where you were also dabbling in the other coins, and then you came back, you were like, no, it's just Bitcoin's the future and Bitcoin's the only one that's money? Or where are you at with that?
Yeah, I mean, luckily I just kind of found Bitcoin first, and never dabbled really in alts, but dabbled in like the stock market. And then after like honestly, like I really went into all into Bitcoin, like mentally as well as like financially, like at the perfect time in 2020. So it's kind of been a whirlwind since. And so like I never really like, I think a lot of people like like even the talk about it, they're like, okay, Bitcoin or Ethereum. And you're like, well, they're totally different things. And to even compare the two, or like to debate like with like actually a serious debate about like Bitcoin or DeFi is just like totally, I think it's not even a worthy discussion, because like they're just, it's just not the same thing. Like Bitcoin and crypto is like, well, Bitcoin is a part of crypto, but like crypto isn't competing with Bitcoin at anything.
Correct.
Like it's,
it
could be potentially like, it could be additive. It could help. Like it could like this. And I think oftentimes it does, but at the same time, there's a lot of negatives. There's a lot of negatives with like people putting their life savings into Cardano and not understanding what it is because they saw a YouTube video or like whatever it is. And so like for that front, being a Bitcoin maximalist and explaining why this is the best asset is something that's important. But like people would be like, you told me not to buy Doge and now it's up 1,000%. And I'm like, well, my man, I'm sorry. Like I told you, buying a dog token wasn't the best idea long-term. I know it is, but like over the short term, like, if you bought a dog token,
it's
you're doing
gambling.
good. Yeah. And like,
if you had if your net worth was $5 million right now, what percentage would you allocate to Bitcoin? What would you do with the 5 million?
I would probably buy like $4,900,000 of Bitcoin. And then I don't even know, pay off some debt or something, and buy my mom a nice car and pay the mortgage or something. I don't know.
Really? So if someone handed you a check for 5 million, you'd dunk almost all of it into Bitcoin. You wouldn't just diversify.
I'd honestly probably buy like $5.2 million of Bitcoin.
I love this answer. It's amazing. Wow. So do you think that everyone in your kind of age group is kind of in line with you? Like, are you meeting a lot of Bitcoiners who are in your bracket?
Yeah. I mean, I've definitely, I got orange pilled a lot of friends and family and people that I'm close with. So they've just kind of been humbly stacking bottoms and tops and throughout 2020, 2021, and this year. I've seen in general, I think a lot of Zoomers like Bitcoin, it's funny enough, is viewed as like
boomer coin.
Boomer coin. I'm like, oh man. And just because it's like, it's only $1 trillion. It's like, it's $1 trillion asset. Like, and they're buying like micro cap crypto, like you basically penny stocks, right? And like most of these things are zeros and get absolutely murdered. And honestly, with the trading fees as well as like taxes on any gains, you're better off just buying Bitcoin and holding. And so like, I've seen a lot of people, like, I think for the people that are really aware and like frustrated with the current system, like a lot of people are like really fed up with like, I'm 50,000 in debt for 1 year of school. Politics stinks. I'm frustrated and I'm mad at the world. And I've been locked down for the last year and I just don't know where to go or turn. And and like, when you understand Bitcoin, it's like, whoa, there's this truth machine that like, I can better my future self and like outlook by just getting some of this thing, but also like there's an opt out from like the chaos and like the kind of the entropy of the world in this truth machine. And so like for people that kind of come to click that, never mind like the long-term gains you get from just the asset, the financial upside, but like I think that's one of the coolest things I've seen is that, for a lot of my friends and family, it's like legitimate hope for a better, more fair future. And like, it's helped on the financial side too.
Yeah. I love that you said that the Bitcoin is a truth machine. It's one of the things I love about this space is when I connect to Bitcoiners, it doesn't matter their background. It doesn't matter their age. It doesn't matter the industry they come from, the country they're in. Like we have these core values that align and it's really easy to just talk and like make friends. And we want to genuinely make the world a better place and create a more fair system. And it's funny because like little things will come up, right? Like certain diets or focusing on, family and just things that, bring about that low time preference lifestyle that Saifedean talked about in his book. So did you find that also changing anything in your lifestyle, like learning about Bitcoin and sort of, because your generation, not to knock on them, but like it's a lot of very high time preference behaviors and like, the TikTok stuff and the Kim Kardashian, I don't know who they like, but you know what I mean? So like, has it changed the way you view some of those social aspects of our world?
Yeah, 100%. It's definitely like the whole time preference thing was something that kind of really blew my mind and changed my outlook. I was told safety, and a lot of people say this, and when they hear me say this, like normie heard me say like the Bitcoin Standard was the most important book of my life, or like they'd look at me like I'm crazy. But I think it definitely has like I think about generations, and like I'm a 20 years old. I don't even have a girlfriend. Like I don't have kids. Like so like
Dylan's
so
single.
so so like why would I be thinking about leaving something to my kids like that? That's out of this world. But with Bitcoin, I'm thinking that, which is kind of crazy because like I know something will outlive me. And so from that sense, it definitely has. Like, I mean, I want to treat my body right. I want to treat my mind right. Like people around me, like it's something that allows you to zoom out. And for someone that's 20 years old, 18 years old, for someone that's 55 years old, I mean, it's powerful.
I love it. Well, we're so lucky to have you in the Bitcoin space. Thank you for doing this with me. Anything else you just want people to know or you want to share?
Yeah, I mean, I think that's it. I mean, I really appreciate you having me on. If you like some of this stuff, I mean, you can just find me on Twitter. I have a newsletter for Bitcoin Magazine where like I put more of the analytical kind of content, market stuff out there. So if you like that, it's in the bio. But yeah, I mean, this was an awesome discussion, and I really appreciate you inviting me on.